This is Business Incorporated on Channels Television, and we're glad to have you. I am BC Adebayo. Coming up on today's program, London Stock Exchange $27 billion Refinitiv takeover plan lifts shares by more than 10% in early trade. And China and Mali put pen to paper concerning framework of the Belt and Road Initiative, and Saudi Arabia to restrict foreigners from taking up some positions in the country's hospitality sector. Let's kick off with the markets here in Nigeria, where it's looking like a bright start to the week at the stock exchange, with the main index up almost 1% at intraday. The JSE index in South Africa was also 0.39% positive at intraday. It's a different story in Egypt, where the EGX 30 was down 0.43% also at intraday. And major Gulf markets were higher intraday, with the Dubai index surging over 1%, with the real estate shares gaining and banking shares declining. Now, the Emirates blue chip lender Emaar Properties was up 1.4%, and top lender Emirates NBD was down 0.9%. In Abu Dhabi, the index was up 0.27%, also at about midday Nigerian time, while in Qatar, the index was 0.28% positive. The Saudi index was the only one in the red at intraday, down over 1%. And in Europe, stocks were cautiously higher in early trade today as investors await the U.S. Federal Reserve's monetary policy meeting this week, with the Fed widely expected to cut interest rates by 25 basis points. And let's talk to Ashutosh Pandey, who's live at the Frankfurt Stock Exchange for more headlines coming from the markets. It's good to see you, Ashutosh. Now, thanks
for having me.
Good. Now, this week promises to be a blockbuster one as far as the global economy is concerned. Talking about several central banks, including the U.S. Federal Reserve, which are expected to decide on key interest rates. We also have several key data expected to be released, and that includes the Eurozone GDP and the U.S. job numbers. How are investors bracing up for all this?
Well, basically, what a week it promises to be, because it's not for nothing that people are calling it the most important week as far as the global economy is concerned. All eyes would be definitely on, as you mentioned, the U.S. Federal Reserve's decision on its interest rate. And as you mentioned, there is already an anticipation of a 25 basis cut to that key rate, the first time in almost 10 years that this is going to happen. And but there are also some investors and analysts who are expecting a 50 basis points cut after the U.S. grew at 2.1% in the last quarter. So that's the kind of expectations there. So I don't see any fireworks happening on the markets if the U.S. Fed Reserve indeed cuts its key rates by 25 basis points. But it's going to be worrisome for the investors if it decides to hold on to the rates, and that looks unlikely at this point of time. But then moving ahead in the week, there is also Eurozone data that is going to be released. Again, Eurozone is going through a tough time as far as the economy is concerned. It is feeling the heat of the US-China trade tensions, and this time around, the analysts are expecting that the Eurozone will grow at 0.2%. That is below the 0.4% it grew in the first quarter. And in addition to that, there would be U.S. jobs data. Then again, jobs data, which comes after the Fed is going to announce its decision on the interest rates. But the numbers are expected to be a little bit on the lower side than what we saw in June. The job hiring has certainly slowed down in July. That's what the analysts expect. And going ahead, they feel that though it is coming after the decision by the Fed, it is certainly bodes well for the insurance policy that the Fed Reserve could bring in by cutting the interest rates by 25 basis points.
Well, we'll see how that pans out at the end of the day. Now, the U.S. and China are also expected to resume their trade talks after a long break. What are the expectations from these talks?
Well, the expectations are muted at best. I mean, there are modest expectations because at this point of time, nobody knows as to which way the talks are going to progress. So there are reports that maybe both the negotiators from both the sides would be looking at fulfilling smaller goals before they tackle the more contentious issues of bringing about structural change to China and China's demand that U.S. first gets rid of all the tariffs that it has imposed on Chinese goods before a deal could be reached. So these are contentious issues. And remember, both the sides had almost reached a deal before China said, the way U.S. says it, before China actually went back on many of the promises related to intellectual property and also related to buying some other goods. So these were the things that are going to bear, and at this point of time, experts are saying that perhaps it is the smaller steps that these negotiators are going to take in view of a bigger deal later in the year.
Now, in company news, Ashutosh, Ryanair reported a 24% drop in the first quarter pre-tax profits. What's weighing on the bottom line of Europe's largest budget carrier?
Well, Ryanair has blamed overcapacity in Germany and also the uncertainty related to Brexit. So why the overcapacity in Germany? It says that Lufthansa, which bought much of Air Berlin, it has actually been selling tickets at below the cost price of those tickets, and that's the reason why it has actually been challenging for Ryanair to operate and make some profits in Germany. The other is Brexit, and Brexit has been weighing not only on Ryanair, it has weighed on all the major airlines in the continent, and that's because Brexit woes have actually led to pound taking a beating, and now Ryanair actually earns a lot of its money in pound sterling, and that means lesser revenue for it, for the company. And also the fact that many Britons have been holding on their traveling plans because of weak sterling and uncertainty, and that is also weighing on airlines in the continent.
Well, many thanks, Ashutosh, for those updates. Chimi will be back with you tomorrow.